I'm going to ask you to introduce yourself a little bit and the company that you're representing today.
My name is Alon. I'm the CEO of a company called Blox. We develop SSV.Network. SSV.Network is really a decentralized infrastructure for Ethereum staking. We develop a technology called Secret Shared Validator, that's SSV, which enables the distribution and the reusability of decentralized infrastructure for ETH staking.
My name is Eva Oberholzer. I'm Chief Growth Officer at the DFINITY Foundation. The DFINITY Foundation is the R&D and not-for-profit organization behind the Internet Computer Protocol. I've been working in the crypto space for like 5 years or more, amongst SEBA, which was the first regulated bank that got a license to offer crypto services, and previously I was at the Cardano Foundation, also as Chief Growth Officer. And now I'm at DFINITY. The Internet Computer, for those of you who haven't heard of it, or the ICP, is a blockchain, is an open blockchain, and some sort of a computing platform which allows you or allows users to build dApps or entire systems on-chain and in web speed. So we are basically, or we have developed a new generation of blockchain. We believe that Web3 blockchain is the network and the cloud. So compared to probably other projects, what we try to avoid is that you have to use Amazon Web Services or cloud services that are known these days and are owned by big conglomerates. And so our approach is more that everything is like web related, that you have a seamless interface to the Web 2 and to other blockchains as well. Thank you.
Come close to us.
Thanks. Sure, why not? So, hi everyone. My name is Eitan. Fun fact, that guy over there isn't me, but he's also named Eitan, and he also works at DcentraLab. But we all call him Bill, just so there's no confusion. And he will be speaking tomorrow. And probably he could have been speaking here as well, but yeah. So that's another Eitan from DcentraLab, but not me. Well, basically we build like blockchain applications. One of them is Chainport, which is one of the 10 biggest bridges in the space. It's a fully custodian level bridge, unlike those decentralized protocols, which are, well, all of them got hacked this year. And we also have tokensfarm.com, which is the biggest yield farming kind of marketplace, you could say. Mostly because we're probably like the only one, but it's rather big. It's like has a few dozen $1 million in TVL. Yeah, that's basically it.
Cool. So for those of you who don't know, I come from an investment fund, Samsung Next. So I'm an investment director that's in charge of a Web3 and metaverse thesis. Samsung Next was founded as an innovation arm to assist Samsung Electronics, to understand and engage better with innovation in software products and services fairly quickly from a financial perspective, but in areas where we foresee a potential strategic correlation in the future for the mothership. Since that was very ambiguous, if you have any questions, feel free afterwards. Okay, moving on. We'll start with something that it's not necessarily related to the panel, because the elephant in the room is so major, with the Terra Luna unpegging, NFT crashing, crypto behaving similar to stocks, et cetera, et cetera. What would be your thoughts on the challenges, and how would you advise this audience as both retail investors, but also as developers and entrepreneurs in this market?
Are we giving investment advice?
Definitely not. Don't take investment advice from anybody, especially not me.
So this is my 4th bear market. And just wait it out. Usually those things, especially in crypto, are pretty short-lived in terms of down markets. And that's the best time to build and start building things. And yeah, if you want to get into the crypto market, I definitely suggest pick a good project and join as an employee, or start your own thing, or or just start something, because I think bear markets are a great opportunity in that regard.
Yeah, I mean, it was definitely a shockwave that went across the entire crypto industry recently because of the Terra Luna case. Nevertheless, I believe it's, yeah, as you said, it's not the first and it will not be the last one. We are in a very experimental phase. There are many things that we have to just first figure out. Everybody who was invested or who is invested in this case, an algorithmic stablecoin, it was the first that existed in that extent. So that is a risk. And if you want to be on the forefront, is it the risk you take? And I guess, so be just careful, but I mean, if not now, when then? So I think now it's a really good timing, and not looking at the investor perspective, but more on a developer's perspective. I think, I mean, even now when tokens are cheaper, I guess it's really an opportunity for you to start building and create your own DAO or whatever it's going to be. And then secondly, yeah, think of utility and not what the investment upside could be, and especially not in the short term.
Wow, so there's a lot to unpack here and a lot of really little time, but basically there are a lot of people who got really surprised that it crashed. And this is kind of a communal thing. I mean, the whole thing of Web3 is sprouting from taking responsibility and ownership. Now, on the other hand, we're seeing a lot of people just riding on the waves of FOMO. And then they're kind of being exposed to risks which they don't necessarily understand. And I think something that is not stressed enough, because there's no one, I guess, to stress it, is that this grander revolution can only happen if everyone steps up and takes ownership. And the way to do that is to actually take ownership, which means to do your own research and to get a better understanding on fundamentals. So for those that were at play, it wasn't a surprise, but for so many people, they were just kind of like, what's called the machine powder, they were just being used. Now the thing is, these decentralized protocols, they can't be simulated. The only way they can evolve is by battle testing. And battle testing means it has to be real money, it has to be real skin in the game, it has to be real blood on the floor. And that blood is of retail users, because this is a general mass revolution. If it is anytime going to happen, it has to be that way. So it can't be simulated by VCs. So I guess that the thing that stands before us is kind of, and people are going to kind of, I guess, learn it the harder way. We need to be a part, and those being a part, yeah, we're going to be losing money because, there's going to be decentralized protocols, which are the end game. So, I mean, ultimately, nobody's here to kind of replicate the same things we've seen over again. And to do the things right, it's not by chance that the two leading coins are the actually most decentralized ones. So to actually be decentralized, you got to be battle tested, and that means that money is going to get lost, because that's the way we evolve. We find hacks in those protocols, and we get better by that, but people are going to lose money. So it's mostly an education thing, which isn't happening right now, and people are not educated enough and just riding on the waves of FOMO and greed, which leads to, unfortunately, bad affairs. So, I mean, the most thing I would recommend, and I also personally try to do that as much as I can, and I hope everyone here that has some degree of influence does so as well, put some more attention on educating people what it means to actually take ownership over your own state.
Very interesting. So I actually had a point that I wanted to speak of later on, but it makes perfect sense to speak about this here. One would claim, and I am that one in this case, that a crash in some aspects are a definite blessing for a lot of companies, developers in this space, retail market aside, VC money aside. I mean, they should have done the research, and it's bad that it happens, but in terms of the speculation itself, especially in specific market, actually, one could say, put a chokehold on the unit economics of the market, because gas prices were all through the roof. People hodled and hoarded tokens and NFTs and stuff, so the assets themselves were too expensive, and maybe it precluded some sort of economics for some of the services that should, or the vision was that they would be built based on that unit economics. Does that make sense? Do you agree, disagree?
I don't think just growth or speculation alone is a good thing or bad thing in of its own, right? I mean, you have to have the lows and the ups, and the reason why is that during the lows you build, and during the ups you scale. But if you go continuously without any lows, without any corrections, you're starting to diverge from reality. And so the more the prices go up, the bigger the market itself, you start seeing things which are out of context, out of reality, completely disconnected from reality. Those things would never succeed, but without a correction, they could. And so the correction is there to to just cut the grass and leave us with the things that might work and might succeed. But you have to have both of them. If you only have the lows, nothing of it develops. If you only have the highs, you completely diverge from reality. And in crypto, the thing is that it's very rapid. So in 4 years, you go from the lowest low to the highest high. And so it's good and bad, right? Because it's very short time intervals, but also it enables you to iterate very, very fast. And anyone, kind of reflecting back to 2017 and then before that 2013, the market is very, very different. And the big reason is because every high gets a lot of people involved, and then during the lows, people start building, and usually the big things that you see in the highs are the things that people were working on 2 or maybe 3 years before that. So you have to have those cycles, otherwise you'll be in stagnation or hyperinflation.
Yeah, and I think it really depends. Like, how does a crash happen, or how does like a shock what is the cause of a hack or of a scandal? It's either you have a loophole, which is then exploited by some actors, maybe bad actors, or you just have bad actors that come up with a project and you trust into the project, and then you realize, okay, it's a rock pool or whatever. So it really depends what are the dynamics. And also in this particular case, it was combined with the macroeconomics, the entire situation, and therefore we entered into that bear market. But if you look at on the productivity side, there's still, like, I think we saw most of GitHub, or like it's crazy what's happening on the developer side at the moment. So that was not really affected. That was really a boost. And I think that is the important part, because if that continues, you will see more and more use cases coming up. You will see that this is an economy that is building itself. And it really depends on, do you invest in those use cases, or do you invest in a piece of infrastructure, such as I mentioned, maybe a stable coin or something with very complex tokenomics, not even probably we would understand if we read the white paper, and then just go in because you think it's because your friend told you, or you read a Medium article where everybody claims that those are the 3 major coins you should invest in, but at the end they just have these are the coins of their portfolio. So I guess, yeah, I think that the real value there is really what's happening behind the scenes. How is the utility continuing? How are these use cases are going to be built? And if that's healthy, and if you see more and more people, even companies coming in, I think then it's, yeah, okay, it's still some sort of a hype going on.
Yeah, I tend to agree with these two viewpoints. One thing I'd like to add is that if it's pure speculation, then that's now not any better than gambling. So the entire sphere, the only way it actually grows is by a feedback loop between what we develop and then how the retail, which is the masses, how they kind of react to it. Now, when the community is disinformed or is mostly speculative, the feedback loop becomes much less efficient, because then it takes a lot of time until like the elephant kind of is in the room, because most of people like in Luna, they knew if they actually looked. So most of the smart money never went into it, not from a way it could lose. So I'm all for feedback loops and for highs and lows, but we need to make sure that when we build, we try to build it with more informed communities. That's one thing. The second thing is that, yeah, I mean, we have a lot of, like, unlike other, I guess, revolutions or new ecosystems that launched before, in Web3, there's a much tighter knit to the community of users. They're no longer users. If you build it right, they're actual participants. And the way that they're communicated with has to be a bit different. So I personally think that what's currently hindering the space is that the way that participants are perceived in their own eyes and in the eyes of projects is not yet really tightly coupled to understand that they're actual partners in it. So we either see developments which are not really related to needs, or otherwise needs which are purely speculative and just trying to kind of get the short-term gains, and then we see projects just trying to catch up with these short-term goals, which aren't necessarily what's best for growing the ecosystem. So it's basically by, but if we empower, whenever we build a decentralized application, I'm not saying, we personally have found a way to do it the best way, but when you're able to kind of put your users as more participants, which actually have a say, this is why ultimately DAOs and governance, we see them growing, because ultimately that's the end game. So yeah, I mean, I'm all for speculation, but it has to be informed speculation. This is the way to kind of make this cycle more efficient.
Okay, so I sort of agree. I just think that in the next bear market, which will eventually happen, because obviously it'll happen, I think the fluctuation might not be as bad because there will be valuable services that people will use. And then it will say, I'm not going to sell this token because it lost value. I'm going to hold it and use it in the economy because I like the service anyway, and it's still valuable to me. And I think that the maturity of the ecosystem, especially on the B2C side, which is way out into the future, is what's making this a little bit more hectic than it should be.
I think speculation is not something which is crypto specific. I think everyone is seeing the bigger markets, from Nasdaq, S&Ps, and so on and so forth, sees great deal of speculation. A lot of the Israeli companies, traditional Israeli companies that went public in the last 2 years, are now being traded on their cash value. Which is crazy. It's basically to say that they have no economical value. So, and obviously that's not true. Maybe their market shifted, maybe they lost some revenue, but it's not like they have zero economical progress. And so I think it's speculation. We tend to think that traditional markets are very smart and very evolved, but they're not really. I mean, they're very similar to crypto, and we see their reaction to it. So. I think again, it's one thing to talk about if it's good or bad, but I think it's more realistic to just say it is what it is, and then the question becomes: is there anything fundamental, valuable in what you're doing, in whatever market you are in?
So it's interesting. It's a discussion that could take the entire time. So we're not going to do it because what you're basically saying is that the tokens and the asset classes like stocks are essentially the same, whereas most of the hardcore crypto native people at least speak out a very different vision. But it's not this panel.
I'm not saying it's the same asset. It's very different.
Okay, so let's move closer to the panel at hand. We're talking about scale and interoperability. So let's do talk specifics. Statistics online say that there are less than 100 million monthly active wallets on blockchains in general, and I might be mistaken by a few 100 million, give or take. But Amazon on its own has 200 million monthly active users. Facebook has 3 billion, which is lower than I thought it would be, but still. So can Web3 technically even handle anything close to that right now? Would it ever?
Yes.
Yeah, definitely. I mean, it already is.
Yes, it can, or yes, it would?
Yes, because that's sorry to jump in here, but that's the major intention of the internet computer. I think that idea was created 5 years ago, the white paper, where we said, okay, somehow we need to rethink the concept of blockchain and rethink the concept of decentralized systems and make them more scalable. And what we see, I was actually really, I listened to the panel before, the Web3 panel, and I was quite surprised that Web3 is understood as owning your data. What it should be is it's owning the entire organization. It's like nobody talked about DAOs. I think the two of us, we were the first people in this conference, or I wasn't here in the morning, sorry, but at least in the afternoon, to talk about DAOs and talk about not only participating in a system. Web3 means owning a system. So we have Web 1, that was read. We have Web 2 with social media, that was write, and now we have Web 3, and Web 3 means ownership. And so in order to be able or to make that happen, we need a platform that allows exactly the same usability and the same interface we know from Web 2, and also allows to communicate with Web 2 and leverages the benefits of Web 2, but also of Web 3, and combine them to each other. And it was also funny, I also heard that chat system or open chat system are going to be the future. We already have. You can check it. It's called oc.app. So there is an app available on the internet computer, which allows you to chat directly peer-to-peer. You just need an internet identity, which is also an interface you used from Web 2, which some sort of a single sign-on option. The public key is obviously public, but you own your private key and you have your data. And with the concept of like how we built the internet computer is that you can always add a new subnet or extend the blockchain, because it's a network of blockchain, and that makes it like infinitely or like unstoppable and scalable. And so I think the question now is more like, what will drive adoption at the end? What will make sure that also interoperability is given between different blockchains? How will those things like bridges, etc., play out? Are they still going to be needed? I think Vitalik said this year that he's a bit skeptical because of the bridges, and I guess the Asian DFINITY hack was also an example of a bridge hack. And so I guess this is more the questions like, how will the entire infrastructure as a whole be connected? But that it's possible, yes, it's already today.
I personally, I mean, we've been in this space for like since 2017. We're already in 2018 had like state channel solutions where people can onboard without even having any non-custodial wallet, and then only when the risks are higher and there are more funds, they can gradually be ingrained. It's not a technological issue. It's more like a perception issue, because, you know, like if there's a bird that has been like living inside a cage her whole life, or its whole life, and then you open the gate, the bird won't leave. What we mostly need is this kind of integration in perception, because, you know, previously, you know, we had like search. The internet was a proactive thing. But then came discovery. Discovery was like a washed name for people just basically staring at feeds. So we have like these master servers and these master banks, which are basically dictating our state. How much we owe, how much money we have, what information, what's going on right now in the world. And this new thing, which basically says, oh, well, now you can be in charge. It entails proactivity, which is currently just not a habit or even a desire of most people. So the scale is not a technological challenge, it's a perception channel, a perception challenge in terms of how do we enable these new kinds of mechanisms where we don't have this nanny or babysitter who's telling us how much money we'd have or what laws are in action or what should happen next. So we're so accustomed to being force-fed this state, that this is what's hindering our scale, nothing else. And this willingness to step up and be proactive, like a network for the people, by the people, so that last part of by the people is a hard thing, because it requires everybody to kind of shift gears in what it means to take ownership over their own lives. That's what's currently hindering us.
I'll challenge the assumption that scale is not a technical issue. It is a technical issue, and I think that it really depends on by which way you're trying to scale, right? And what trade-offs you're doing in the middle. We saw catastrophic trade-offs with bridges and stuff like that when They're badly designed, and their selling point is very different than their capabilities. And so, the current roadmap I see for scale is Ethereum centric, and around it you'll see a lot of extensions. And so you'll have L2 extensions, or you'll have maybe other blockchains with some kind of bridge between them. But I think that the important thing is that you'll have some kind of a core which is fairly decentralized and scalable. And on top of that, you can build extensions to it which scale it even further. And then different applications will have different trade-offs. And so that's kind of the roadmap I see. Generally taking most of the market in terms of where it's at right now. So Ethereum is about to do the merge, which is the big change from proof of work to proof of stake. And the merge is not necessarily a prerequisite, but it's a milestone towards really the first step in scale, which is L2s but built on data sharding. Basically, you can extend significantly the amount of data you store on the blockchain, enabling a lot of L2s to work on that blockchain. That's going to be the first major increase in transaction throughput. And from there on, you'll see execution sharding and so on and so forth. But I think that for the most part, that's really kind of the realistic roadmap for scaling. And my hopes is that a lot of the other blockchains will figure out how to move value between Ethereum and themselves without sacrificing too much security and decentralization. I believe that's the kind of the realistic roadmap ahead.
I can jump in here as well. I slightly disagree. I think the reason why there are shardings and I don't know, tunnels happening is because of the scalability issue, and I think it's important to have these layer 2 solutions as well. But I also think, like with Ethereum 2.0, EVM was a really great introduction of smart contracts, and Ethereum is the network with the biggest network as such in the community and utility and benefits, etc. But I think in order to really, that's what I meant with the infrastructure, that the system as a whole or blockchain as a whole can advance. We really have to rethink the way, the way scalability or what scalability means. And for example, we're gonna have a Bitcoin integration, a direct integration coming up at the Internet Computer, for example, and that means that you can do transaction directly on the Bitcoin network. Same thing, hopefully we'll do with EVM and have an EVM integration. It would mean that you can do transactions directly on the Ethereum network. So you don't need this like wrapping and then again, however, those kind of infrastructure. And I think that's a bit how I see it. I don't think there's going to be this one big beast, but that's going to be it's going to be a new internet.
Well, I agree there's going to be a new internet, but I do think that you're looking at scale mostly from the infrastructure side, while most of these scale issues that we're seeing or we're talking about is the cost of transactions. And how would the blockchain network or the Ethereum network, we'll talk about that, so that gas prices or whatever it is it's called in blockchain, I forget, would be something that would make sense for companies and private users alike.
Yeah, so the issue there is technical. How many transactions can you process in a second, right? So the more transactions users want to process and hit a kind of a limit, a technical limit on the side of the blockchains, most blockchains, or at least the reasonable ones, price transactions accordingly. So if you want to get your transaction first, you'll have to pay more. And so if there's a hard cap on the number of transactions in a block, then if you have, let's say, 100 transactions and you have the 101st transaction, somebody needs to be pushed away, or at least wait for the next block. And so really the prices you're talking about are really just a function of how much transactions that the blockchain can do. And I will add to that is that what is the reasonable trade-off when you try to do scale? Because scale is a very tricky thing to get right. And I think that if you do it wrong, it's something which is very technical and very difficult to explain until it blows up. And so that's I think the balance you need to figure out.
I just want to add that basically we all speak with these terms, but they're not well defined. And if you look carefully, there's already a very, scalability as the terms of, like, for example, number of transactions, and when it compounds with security, which loosely relates to how many disparate factors are being kind of used to verify this. In general, it's a fractal or continuous scale. So, if I'm signing a contract with my landlord, I don't really need the entire world to witness it. I need a way that if there's a disagreement between me and my landlord, to easily scale up the number of verifiers or validators, or those that basically are able to kind of help me see the contract through. So we're already seeing a great host of kind of these trade-offs being made. Right now, they're kind of like discrete. So there's like discrete blockchains. So if I'm okay with a certain level of social media risk in terms of, I can go to Kusama, this like smaller security chain, or I can go to BNB or to Polygon, etc. There's going to be many more of these, and of course with rollups, like Starknet is doing, etc. Many of these things will get sorted out. So I see it more of as basically there's a hindrance, but again, I don't think it's a great technological hindrance because all our applications at DcentraLab are user-facing. We're seeing a lot of users. And I'm not seeing like a great bottleneck. Still, people can choose more or less where they want to do stuff, and there's a lot of alternatives. But I think gradually what we're going to see is just more continuous, a more continuous dial where you can choose how much risk you are willing to take and sacrifice for speed, etc. So if I'm doing $1 billion trade, yeah, I don't mind, like having a greater finality and paying more for it. If I'm doing something small, like making a like on a post or chatting, it's a different thing. So it's just going to be a more continuous scale, but we're already seeing these things in motion. I don't see the technological barrier now. I think mostly with ZK rollups, it looks like it's on the right direction. I'm still seeing just people, like the masses, not being kind of, it doesn't really touch their lives. So there's a lot of speculators, people that want really short gains. And by the way, this is another great hindrance because it's harder in this space, in my experience, to kind of make long plays. Because if we're actually doing it decentralized with a community, and it's not like a giant big VC holding all the diamonds, then they're expecting a very short-term return. And then we, as a project, cannot do a long-term thing. So this is, again, some kind of hindrance regarding of decentralizing, but let's say decentralizing the participant base, not the technological layer.
Okay.
And I agree. And I think when you say a new internet, yeah, it's not only technical, it's definitely, I think what you said, the awareness and what drives adoption is the key question. And I think if you can really combine the positive things about Web 2, there's the single sign-on option, for example, or the speed. What we also always forget is like how much data can you store in a blockchain? If you really want to have Web 3, you're gonna, I don't know, upload pictures, videos, a new YouTube, that needs data capacity. So I think that's technically possible. And looking at those benefits, they're mainly about the UI from Web 2 that you used, UI and speed, probably throughput. And then what offers Web 3 is that you own online web services, you own a system. It can be an Uber, it can be whatever platform that is out there, a decentralized autonomous organization. And when you realize that the interaction with this tool doesn't require you to have a wallet or to even look after your public key, but it's just seamless. You go in as you've known it from WhatsApp or whatever application you're using, but it's directly connected to a smart contract on a blockchain. You can either choose if you want to participate in this blockchain or not and hold tokens. And when you see, okay, this is something, an investment I really understand because I'm a user, I think that's going to be a real trigger. And I guess that's the the new internet that's going to be required to really enable scalability.
So you're also pointing at a massive issue with user experience. I highly agree with that. I mean, if I take like Axie Infinity as an example for a consumer play that's out there, for someone to start playing with that, they need to go through 14 different steps on 3 apps, bare minimum, which is sort of insane. And you get all these terms and references that most people who are not crypto native simply don't understand. One solution that we're seeing are non-custodial wallets, but in software, so you don't have to go to your hardware wallets and stuff. Their user experience is even worse, but that has trickiness, especially on the security front. And on the other side, on the large exchanges and custodian services, they're being beaten basically because they're a massive target with a lot of money behind it, and things are changing all the time. So where do you see this moving on that dial?
I think you'll see a bunch of different things. I mean, every single approach has value and benefits, and also obviously things that don't work well. I think centralized exchanges play a major part in liquidity and so on. Stuff that maybe on-chain transactions are not necessarily going to be there in 5 to 10 years. But I think the key thing is that, especially with blockchain, is that on the fundamental level, there's a place where you can experiment freely. And people still own their keys and assets. As long as you have that, you'll have innovation. The big thing, I mean, if you're looking at blockchain today, the only thing really that separates blockchain to fintech or whatever fintech was or is being decentralized, nothing else. If you take the word decentralization, whatever it means, but if you take it out, you're basically stuck with the traditional financial world. And so as long as you have that place, and that's why it's so important to invest research in L1 blockchains, because that's basically the place where blockchain or crypto is defined. And so as long as you have that place, you'll see innovation, but it doesn't mean that one thing is better than the other. The only thing I think is important is that you have a place for innovation to occur without any struggle, and that's exactly something we didn't see with fintech or in the financial world for a long time. And with blockchain, you do see that. So it's not necessarily centralized versus decentralized. Is rather it's very easy to become centralized. So you need to make sure that you keep those decentralized places which are open and doesn't pose any limitations on innovation. And then from there scale up to centralized and other different types of services. That's where kind of I think the important thing for the industry as a whole to invest.
Yeah, and I guess that's the value chain. So every crypto project starts centralized, and I think it's there are many good reasons for it to happen this way. And it's probably the only reason. When I talk to my team, I always say your major goal is to become redundant at some point, because that is the goal of a foundation, right, behind a layer 1 protocol. But it's not, I cannot think of that at the moment because we are still in a very, very early stage. The same thing is seen with DAOs. The DAOs that are now created, they start with first doing marketing, investor pitches, create a first NFT, and then at some point when they already have a community, they then become decentralized, and then they really work on their decentralization strategy. And when you look at decentralization, it's there's always a trade-off between how fast do you want to be and how decentralized do you want to be. And it's not an easy thing to handle. So every time we think of, okay, this new feature should be part of the internet computer, like, okay, is the community able to build it right now? If yes, what would they require and how long would it take? And then sometimes you're like, yeah, probably way too long. Okay, let's get a dev team and they build it themselves. So this is a bit a dilemma, and like if you're really inside the tech of blockchains, that's a key question that is happening. So decentralization is often, I think it's the major thing that community uses to bash other communities or projects, and there's so many layers to it, and so I really don't like if you talk about decentralization, you really have to talk about it properly and also look at the stage where different projects are in, and then you can come to a conclusion. And I think the roadmap is more important than the level of decentralization as well. And we also see that Ethereum or Bitcoin, I mean, if you look at the miners and the hash rates, it's like, yeah, what does decentralization really mean? And there are so many more things attached to that. So yeah, I guess that's a bit my view.
Yeah, it looks like we're nearing our time. So quickly, just, 14 steps to participate in some kind of DeFi protocol sucks. I mean, most people won't do that. And almost nobody would really understand what's going on behind the hood. So that's what happened when you have like engineers in charge of product. So in general, there's like a great lack of product managers, good product managers in this space. But these products will get layered on. The thing is that most of DeFi or most of the blockchain kind of adoption right now is basically steered by greed. Because, it's like code is money. So let's make a lot of money, right? Because we know how to code. And it still hasn't touched like the holy grails, like GovTech, health tech, and it will get there. There's already ways to abstract away like steps. There's already protocols to do that, and products that can abstract it away. And of course, until that's properly done, it'll be hard to attract more users to the space. But again, not a technological limitation. There's already ways to abstract away, going into DeFi protocols. So that's not an issue. I think what we're going to see going forward is basically more profound experiments that are kind of, I know like the leaders of the space, like Vitalik, etc., and they're all in for the longer end game, which is like the way for us to kind of lead society in a more self-sovereign manner where everybody has, a vote. So these kind of experiments are really interesting. And once more and more people say, yeah, I'm willing to put like my skin in the game. I'm willing to put my money. I'm willing to put my power there. I'm willing to put my efforts in there. And yeah, there's going to be costs like in any revolution. Once you see this kind of mentality go through, you're going to see much more interesting products come out than just kind of recreating. But also the DeFi space, when we're trying to now recreate everything with with decentralized finance, it's very interesting. And people getting bashed economically, it's part of it, but it's an interesting part. So yeah, and I totally agree with what you said regarding like starting centralized and then decentralizing gradually, because unless you're backed by a giant VC and you're doing any kind of DeFi protocol, in order for it to succeed, it needs to touch user funds. And if you're starting out decentralized, it's going to get hacked and your users are going to get burned. And then they're going to get angry, or they're not going to come back, or or worse. So it's remember that the users come first. This is why also people like CZ and Binance. They're not decentralized, but I do agree that decentralization is the one and only killer feature. But we must reach there responsibly, because we're going to reach there on the backs of people. So this is why it's important to start in a sane manner, product first, users first, and decentralize gradually. The same way we saw with our bridge, we're doing the same thing. We're keeping user funds and safety first. We're gradually adding decentralization layers, not starting with something that's going to be battle-tested on the backs of users, which are ultimately going to get hurt unless it's centralized financially, which again defies the purpose.
Good to know. Thank you so much, everybody.